Okay, good morning. It is Thursday. It is Thursday, the 14th, and PPI data is out. So, want to kind of explain why we look at this. PPI, Producer Price Index, for the manufacturers, and CPI for the consumer, for people like you and myself. That data is factored into the Fed's decision for PCE, the Personal Consumption Expenditures Price Index. So the reason why we're looking at CPI to see if it's elevated or not, which this week it was. We got the results of what CPI has been doing from the consumer perspective. And now today, PPI is elevated as well. I believe overall the estimations were 1.2. It came in at 1.6. So now we get bits and pieces from each, and it paints the puzzle for the Fed for the PCE, which is how they decide. And overall, the narrative is, based on the data, it is sticky. Inflation is sticky, and it's going to be a challenge for the Fed to, they haven't been saying that they were going to aggressively cut rates anyway this year. They hinted at June. And then earlier this morning, I saw that the ECB, the European Central Bank, said June and September and December, they plan to cut rates. So 3 cuts. We'll see if the Fed starts echoing the September and December narrative. All those central banks are aligned on the June narrative. So now we need to see what the end of the year narrative is going to be. All right, so the PPI data came in higher than expected. Really, what I would be paying attention here is with things like healthcare and airfare and financial services, and all those increase. There's a lot to go into this for the PPI. Just given the purposes of this video, I'm keeping it simple. But there was a rise. Even as it says here in February, nearly 2/3 of the rise in final demand prices can be traced to the index for final demand goods. So inflation is here, it's sticky, and I'm pretty sure the markets will slowly adjust to this news and start baking things in further. I think a June cut is probably officially on the table in terms of bets goes for the markets. But if we get a continual uptick in inflation, I would not expect those bets to stay as they are. But yeah, PPI is reflective of higher inflation. So let's take a look at the markets. At the time of this video, it is it's 8:50. So 8:50 Eastern. Everything is, pulling back off this data. The markets take a while to digest. They didn't care about CPI. Would they care about PPI? Who knows? Because the two, again, go into the PCE for the Fed's decision, which, again, confirms their narrative earlier this week or was it last week, of not cutting rates at all this quarter, because they're getting this information. But let's take a look at the overall crypto market. And so here we are we're pulling back. It could be because of that PPI data. Really not sure. Really have to wait until the market's open at 9:30 Eastern here in the United States. But we are getting a pullback. We do need the pullback anyway for the overall market. And if we do could consolidate around the low to 2.6 trillion market cap range, but maybe 2.5 trillion could be where we find our footing. We have the altcoin market here, the total 3, and that is, we inched up closer, like I've been saying, 800 billion in terms of the market cap size. So we are We were almost there. We pulled back, I'm assuming because of this PPI data, combining the CPI and the PPI, both being elevated. I think some in the market are maybe starting to wake up and say maybe risk on, like crypto. I may need to reallocate. So we get a healthy pullback here down to say the low 700 billion, and then we consolidate or go higher, or we'll wait and see. It's really a wait and see right now. Let's take a look and see what Bitcoin's doing. Bitcoin is kind of just chilling out. It has multiple levels of consolidation. So Bitcoin could hang out here at 71. It really has multiple levels. I will do something for you guys here, probably next week, share with you some on-chain data that isn't really showing strength in this being a bull market. I'm still going through it, but I should say we're either at the start of a bull market, or this is just kind of like a waffle through or something like that. But this is what's going on with Bitcoin. If we pull back to 64K, that'll be healthy. 61,000 is where we could find footing, and that's a fib level. But again, we'll wait and see. I think we have like roughly 35 days or 34 days till the halving. Ethereum has pulled back from its 4,000 high. We could, again, with Ethereum, we can consolidate, but, maybe 3,600. We bounce off that and keep going. If it does not hold the 3,600 number, then 3,300 is where I expect us to find a footing. And then we would have to assess technically from there what ETH is up to. Let's see. We'll see what the SPY does. So the SPY and the Nasdaq, we're going to see what these two do at the open. Are we going to push higher and whatnot? We'll see. The markets aren't open yet. I think we got 30 minutes until they open. And so just keep an eye on that, especially with now both the CPI and PPI data. The VIX, good old VIX here. The VIX is, bouncing off this trend line. So we have a theme here, bouncing off this trend line. Could it be a grind up? If I extend this out, does this grind us up higher into the fear zone? So that would be out. Do we grind like this until August, till summer? And then maybe we peak up to the 22. We'll see. I'll keep it here. We'll see if we stay on this trend line up until this stretches out till August of this year, and go from there. Should be interesting though. The more this goes higher, the more risk on is not favorable, which means valuations come back into play, especially in the tech sector. Crypto is tech. See what this is doing. The Bitcoin share, BlackRock, not much of a pullback, but like I've been saying, once this rolls over, this will roll over. You got a lot of gap to fills down here. Inflection on this ETF is $24. Once we get below $24, then you could say it's officially like bearish. Same thing with the FBTC. $37 is inflection down here, and when it does roll over, you got a lot of gap to fills. So, and that would be healthy. It'd be needed. Van Eck, let me put one here for Van Eck. Van X is right here. What is that, 56? Yeah, $56 on Van Eck. So when that rolls over, it rolls over. So let's get into some TA. Let's get into some TA here. Dollar General. So Dollar General, at least here in the United States, for those who watch this or in the U.S., Dollar General reported higher than expected, better than expected earnings. And really why I'm sharing this is because two things. First, you have a gap to fill up here. So this orange dotted line is pre-market. And with these better earnings, you got an opportunity to probably see a rise up to fill this gap up to like 200, 197. So that could be a play for those who want to make that play. But what this speaks to for the overall economy is that there's strength in discount retail, and that would signal that the consumer demand for affordability is gaining because of the rise of inflation. Dollar General has an assortment of very cheap goods, and with inflation rising, consumer demand is going to look, your average person is going to look for cheap, trying to, save a buck. So this kind of plays into the inflation narrative from CPI to PPI. We're seeing a discount retailer see an increase, an uptick in sales. So just, keep those correlations in mind. Dick's Sporting Goods. So I talked about Dick's yesterday, and they had better than expected earnings as well. And they're already up. It's $200 on here. Pre-market. Span out real fast. Let's see what we were looking at here with Dick's. Okay, so we're in no man's land here with Dick's Sporting Goods. There is no support and resistance. It's called a blue sky setup. So this could run. How high? I don't know. It's up significantly pre-market. So we could get a sell-off at the open. But this definitely is up. It is running up. But yeah, told you guys yesterday about this. Keep and watch on the pattern. Good earnings, we run up higher. And good earnings, it ran up higher. So here we go. The inverse now. I share with you Dollar General. Now let's look at GIII. So GIII is apparel brand group for like Donna Karan, Bass. These are, Donna Karan's pretty expensive. I don't know how luxurious it is anymore, but it is pretty expensive, and their sales are down. So we get a picture here of discount retailers' numbers are going up, and a high-end retailers' numbers are decreasing. And I wouldn't say they're super high-end, but they're not discounts. Donna Karan doesn't do discounts. A lot of these stores that are under this company are pretty much in the middle class, upper middle class type tier. So again, these are all confirmations. It is getting close to the 200-day moving average down here. You could see a bounce off of the 26 number and then make its way up to 30. So it could be a $4 spread there if you're looking to day trade it. Yeah, but that's telling. That's telling. That's why I have this up here. Okay, so now we're going to get into some meme action. So the meme coins are going parabolic. I believe Floki is, over the past 7 days, has been the biggest mover. This kind of chart here, it's running up. It's overextended on the RSI. If you do get a pullback, it'll be down here to the 0.00001 number. So yeah, this is Floki. Floki. We got some levels. Let's see on the 4-hour chart. We got support here. Got a support level here and another support level right here. And then another one right here. So there you go there. Let's move on to the next meme coin, WIF. So shout out to Simone in our community. She brought this to our attention on one of our live streams. And this tells you how crazy the money is out here for meme coins. This particular crypto raised 675,000 or something like that to get a hat on the Las Vegas Sphere in Nevada. So they raised that in 3 days, $650,000. So it tells you that we're getting very frothy out here in the market. And it has been one of the biggest runners, though, in the crypto space. So it definitely needs to come back down. But just putting it out there. And then lastly, with our meme coins, and what I wanted to show you as well is to be cautious of Jupiter. Jupiter here from a technical perspective is, let's see, we got this. This will be 87 cents would be like a floor. It could consolidate here at 92 and then try and pump back up over $1. But when this starts to roll over, this will roll over. You have a liquidity vacuum here at its inception. And 9 times out of 10, when you see any stock or crypto that runs up like this, again, this is a pocket of liquidity. It has no footing, and it will slowly make its grind back down. Let me pull up one. So this is definitely going to come back down to 2 cents, Jupiter. But if we do POC, remember clearly the POC network for crypto, POC USD. So the Pocket network did something very similar. There we go. It had ran up, and in its inception, was this the chart? Which one was it? Was it the KuCoin one? Bitkit? Oh, man, can't find the chart. I thought I had it. But generally, going back to Jupiter, these types of run-ups are liquidity vacuums. So it will eventually come back down. So be cautious. Definitely don't get too greedy on the meme coins and these cryptos that are just going parabolic. Enjoy your profits. Take some of your gains. Be smart. And yeah. So, excuse my voice. But here we are, My Tech Academy. Come join us. We got a lot of things happening. We got a business credit course going on. A lot of activity. We discuss a lot within our Slack group. And again, you got Eli, you got myself, and you got Chuck. So enjoy your Thursday and happy trading.